So let me read the question. It says, the following trial balance, it is in page 8. The following trial balance was prepared by Millennium Limited as at 30th June 2021. So ordinary share capital, 8% redeemable preference shares, 6% debentures, revolution surplus, retained earnings, revenue, inventory, purchases, we have distribution, administrative expenses, interest on debentures, interim dividends. Interim dividends are those dividends which are paid during the year as the year progresses. So interim dividends, we have preference and ordinary, investment income, land and buildings, so land is 16 million, plant and equipment, furniture and fittings, investment at fair value, not at fair value, accumulated depreciation on building, plant, furniture, accounts receivable, bank, accounts payable, deferred tax, share premium. Then now additional information. Additional information has a lot of stories. Let's do the couple. Then there are. Now, what I want you to know and understand very well is that in published financial statements, expenses, we say the expenses are done what? Grouped to cost of sales, administrative, selling and distribution. You don't bring expenses, depreciation, what individually. If you do that, then that is not published. So the first working, which I always want us to do, we come up with what we call allocation schedule, where we bring all the items together before we go for presentation. Is that okay? Yes, so have there working one, working number one, working one, call it allocation. Allocation schedule. Allocation schedule. Then have 8 columns, eight columns. 8 columns. Have 8 columns. Of that. Alright, so yeah, alright, so here, write for me revenue. Revenue. Then we follow it with the cost of sales. Cost of sales. I want us to move together because the spaces are quite small and I cannot be able to get full. Then after cost of sales, you say other income. Other income. other income, then distribution cost, then admin expenses. After admin, finance cost, tax, then OCI. OCI stands for other comprehensive income. Other comprehensive income. So just in case network ipotelea mtu, I repeat, this is revenue, cost of sales, other income, distribution, administrative, finance costs, tax, other comprehensive income. Other comprehensive mostly is revaluation. So let's kick off by you saying, as per T balance, T balance is the trial balance. So the way we have been given there. So let's check the trial balance. Before when we go to the notes, we check the trial balance from top down to identify those items. Then now when we go to the notes, we adjust them. So as per trial balance, let's check from top down. Are you seeing revenue somewhere?
Yeah.
How much? The revenue is revenue. 14. No. 283. No. 283. 283. 460. Hakuna cost of sales. So that one we shall calculate. So leave it kidogo. Other income. Are you seeing investment income somewhere? Mostly investment income, you know, come other income. Have you seen it?
Yes.
Yes. How much? 1,500. So capture there 1,500. Then after that, are you seeing distribution?
Yes.
How much? 22,300. Administrative 34,440. Then finance costs, those ones you can leave, tax you can leave, other comprehensive you can leave them for now. They are not there. So let's go to the notes, additional information. We shall read as we classify. So number one, let's start from number one. The sales proceeds include customer deposits of shillings 4,200,000, which Millennium Limited accounted for by debiting bank and crediting sales. So inside this revenue, there is a customer deposit. When customer gives you deposit, you only sell kweli? No. The sale is when now the customer has paid in full and you have given them the items. So you need to subtract customer deposit. Customer deposit is not a sale. So customer deposit, this is 4,200. That is 4,200. Next, number two. The cost of inventory as at 30th June 2021, that is the closing stock, was valued at 16 million. This included goods whose cost was 450. Whose cost was 450. Replacement value was 400. Fair value of 500 with a selling cost of 80. They're just trying to confuse us. But I want us to get cost of sales somewhere. So just have a small working outside there. Call it cost of sales. Cost of sales. How do we normally calculate cost of sales? Cost of sales, you take opening inventory. Sure. So opening inventory, that was given in the trial balance. Can you check and tell me how much? Opening inventory in the trial balance. 12,400. 12,400. Then add purchases. Add purchases. Purchases is how much? 147, 200. Then you less closing inventory. Less closing inventory. So closing inventory is the one they are taking as a lot of story up on note 2. So check that note 2. They are saying the cost of inventory was 16. This included the goods whose cost was 450. So inside the 16, kuna stock iko na value ya 450, and it could be replaced. The replacement value is how much? 400. But nobody has said we are replacing. Sure. So forget about replacement at all. Replacement only becomes relevant if they have said it was done what? Replaced. But here they are saying with a replacement cost of 400. So that replacement cost is useless. Fair value is the market value of 500 with a selling cost of how much? 80. Those two are very relevant for us because they are saying inside this 16, there is a stock with a cost of how much? 450. Cost. If we sell this stock, we will sell it for how much? 500, but we will incur selling cost of how much? 80. So it means the net selling price will be 420. So the net selling price 420 and the cost is 450. So there is an expected loss of how much? 30. So to avoid overstating the value of the stock, it should be 16 minus the expected loss of how much? 30. So because the 450 is already inside the 16. Forget about the replacement cost at all because nobody has replaced those stock. Then they are saying this 450 can be sold at 500. And if we sell it, we will incur how much? 80. So it means the net amount we can receive from it is 420. That is the selling price. And the cost is 450. So even if you try to bring the replacement cost here 400, which the best of the best is how much? 420 because replacement cost is 400. So the best price is 420. But even if you sell it at 420, still you will lose how much? 30 because the cost is 450. So it means to avoid overstating our closing stock, we take the whole 16 minus the expected loss of how much? 30. Whatever. So that one comes to how much? So reduce the closing stock. 15,970. So this is the cost of sales. Total. 143. Very good. So take it to cost of sales. Yeah. 143, 630. Haya. Let's go to number 3. Let us go to number 3. Number 3 says, the 6% debentures were issued on 1st October 2020. 1st October 2020 mpaka sasa hivi, how many months? Sasa hivi when hii kwa wanafunga. When are they closing the books? June 2021. Can you count for me October up to June? How many months are those? Because it's not full year. How many months are those? They are 9 months. Yeah, those are 9 months. So they issued a debenture with interest of 6%. So kuja hapa useme debenture interest 6%. Can you go and check the value of debentures in the P&L? In the trial balance, sorry. In the trial balance. What was the value of the debentures? 10,000. So you take times 10. But this 10 you multiply for 9 months. How much do you get?
Sorry.
450. So take it to finance cost. Interest you take to finance cost. Interest you take to finance cost. Then I want you to listen and listen carefully. There is something called preference shares. Preference shares mostly, it are not classified as so many, but like redeemable and irredeemable. Redeemable, to redeem means to buy back, to get back your shares. So these people calling themselves redeemable, what happens? They give up, preference are not the real owners of the company. Wao wanawapatia tu pesa, wanalipwa nini? Dividends. So the dividends paid to redeemable is not treated as dividends in quotes. It is normally treated as finance cost. Because hao watu wanakupea pesa alafu wanaredeem. Wanakuja wanachukua for even 1 year. Wanasema tunataka pesa yetu. So the dividends you are paying them is like a cost of financing that money. So that is why go back to the notes I gave you. Just go back to the notes. Utaona mahali tumeandika finance cost. Pale kwa important notes. You'll see finance cost. Finance cost comprises of loan interest on redeemables. Yes. So when you pay dividends to redeemable, those people who normally take back their money, then that one is treated as part of finance cost. So can you check your trial balance? Check your trial balance. Check your trial balance. In your trial balance, are you seeing redeemable preference? Yes. At what rate? 8. Yes, 12,000, but the rate is 8%. So the amount you pay them as dividends in accounting is always classified under what? Finance cost. So you say dividends to redeemable preference. So you take 8% times 12. 8% times 12. That is for the whole year. Tell me how much? 960. So take it to finance costs. Very good. We proceed to number 4. Land and buildings are carried under the revaluation model as permitted by IFRS. The recent valuation took place on 30th June 2019, resulting in the value included in the trial balance above. The revaluation surplus of 34 resulted in the value increase. The revaluation surplus had a life of 50 years as at that date. On 30th June 2021, land was valued at 18 and the buildings at 34. There were no changes in the useful life. So that one will wait. In that note, just circle it out. We will check revaluation gain or revaluation loss. That one will wait a bit. So just hold it. Let's go to number 5. Other assets are being depreciated as follows. Plant and equipment, 20% on straight line. Straight line means you charge depreciation on cost. Furniture and fittings, 25% per annum. Using which method? Reducing. Reducing means you charge on net book value. Net book value. Net book value, you take the cost, you subtract the accumulated depreciation is when you charge. Depreciation is classified. Depreciation is classified as cost of sales, except for depreciation on furniture and fittings, which is classified as administrative. So calculate depreciation, all of them, classify them under cost of sales, but for F and F, we take under what? Admin. So so come here and say depreciation, We start with buildings. Check trial balance. Are you seeing land and buildings? Land was how much? 16. Total 56. So meaning building is 56 minus 16. And they are the same. The useful life was how many years? 50. 50 years. So take this minus that, then divide by 50 years. What do you get? 800. Where do we take it? Cost of sales. That is what they have said. But ideally, sometimes building our semantic. Building when they are silent, building in the wrong of administration. If they are silent, we assume and building or building. So but here they say, so who are we to deny? Next, depreciation is on what? Plant and equipment. So P and E. 20% on straight line. Straight line, just go and check the cost of that plant and equipment. Plant and equipment, where are you? Where? Yes. It is 55. The cost of plant and equipment. Yes, times 55. Whatever you get, we take to cost of sales. So what are you getting? 20% of that? 11 what? What you give this? 11,000. Alright. F and F. F and F, they have said what percentage? 25. But 25% on which method? Reducing. So reducing, first of all, take the cost, you subtract the accumulated depreciation. Check trial balance. What was the cost of F and F? 35. 35 minus the accumulated was 12. 800, 9600. Then what you get, they have said we take it to admin. The accumulated depreciation on furniture and fittings is 9600. They have refused to see. Yeah. Get for me that figure. No.
63.
63. What did you go and give my 6350. Next. No, sasa hapo kwenye tumefika, before nilenge hapo, nataka tupate revaluation. Revaluation gain loss, rusha huko kwa OCI. Mwende wa mtende mwandike OCI. Other comprehensive what? Income. So we have to check revaluation. I have an outside worker. So I want to check revaluation. How do you check revaluation? You compare the net book value against the revalued what? Amount. So let me start with, we have land, we have buildings. What is the net book value? What is the net book value for land? Check trial balance. They said 16 in bracket. So this one is 16. Buildings. So buildings you have to be careful. Buildings was the difference. The difference between 56 and 16. So it means building is how much? 40. I hope everyone sees where 40 is coming from. In the trial balance, they have said land and buildings, 56, in bracket land 16. So building is the difference. Minus accumulated depreciation. What for you to get net book value? Accumulated depreciation on buildings was how much? 8. Then this year you have charged how much? Check your location. Your location buildings we have charged 800. This one here. We have charged 800 for this year. So 800. So this one should be the net book value for land, for buildings. How much?
31,200.
31,200. Revalued amount. Revalued amount. So how much is the revalued amount? Revalued amount. Ilikuwa note number 4. Land was revalued to 18,500, and this other one 34. So this is a revaluation gain. So they have been revalued upwards. So these are gains. So this is revaluation gain. So get this one, gain of 25. Yes. 25. And the other one is a gain of 28. Total 50. 53. So we have a total revaluation gain of 5,300. A total revaluation gain of 53. So that one you take to OCI, other comprehensive income. So, is that okay?
Yeah.
All right, so we go back. So you say revaluation gain. Revaluation gain, take to OCI. How much? 53. You just subtract. All right, let's go back to the notes. So we are done with note 1, note 2, note 3, note 4, note 5. Sure. We are going to note 6. We are going to note 6. A provision for corporate tax of 24,500 for the year is required. So current tax, corporate tax is the current tax. Current tax, take it to tax and a tax. How much do they require? 24,500. 24,500. Next. Number 7. The taxable timing differences. Any moment you hear timing differences, temporal differences, deferred tax loading. You remember deferred tax. So the taxable temporal timing differences for the year amounted to 45, while deductible timing differences were 24. I know what they want. Any moment you see taxable timing, permanent differences, they are talking of deferred tax. So right there, deferred tax account. Deferred tax account. Deferred tax account. Deferred tax account. For deferred tax account, we want to check the changes. The changes is what goes to P&L. So how will you know the change? You check the balance brought down vis-a-vis the balance carried down. The difference is what goes to the P&L. What was deferred tax in the trial balance? Check trial balance. How much was the deferred tax? 52, second last. It was 52. Then closing, a butcher closing in that note you are reading. The note you are reading, they say taxable 45, deductible 24. So it will be 30%. You take the tax rate. You take 30% in bracket. Taxable is 45, but you're supposed to deduct how much? 24. So take 45 minus 24, then take tax rate. The difference will give you the deferred tax. How much is that? 6,300. So the difference, the movement from 52 to 63, that increase is for the year. So P&L to profit stroke loss, balancing figure. Balancing figure. Balancing figure. 1100. 1100. So go to the allocation schedule. So go to the allocation schedule. You say deferred tax. So under tax, you bring 1100. We are almost done with the allocation. Number 8. The directors proposed to pay a final dividend. We are done. Question. Can you add for me vertically? Add those figures vertically. What you get holiday? You get holiday from Will there be a problem when I go for a holiday after meaning permanent? You know, right? Sorry to hear, but bring a copy that people can have found. Yeah, it's not for your Sarah, bring. I'm on a issue. Is it your notes done? This better. Come up with a single look. Continue to say something. Is it better? Wewe uone huyo hata inakaa 600 pages. So this is 279, 260, 155, 430, 1500, 22, 300, 40, 790, 1410, 25, 600, 5300. Confirm. So we can go to presentation unless someone has a question. This is the heartbeat. If your heartbeat you published, this one. Now this one has no mark. No marks. Hiyo ni wake. But ukitoka hapo presentation hata saa kuna kitu. Other than starting. The presentation is just now time wasting. Wanajita nani? Millennium. So right there, millennium or whatever. Millennium Limited. Profit and loss and other comprehensive income. For the year ended 30th June 2021. So I have one column. Shillings are in thousands. So revenue, of course, it starts with revenue. So revenue, kila kitu ni working one. So working one, you pick the totals. The totals we got. So check the totals. Abigail, different tax. You are getting 63. Tax getting 63. Abigail, current tax was 24,500. Then deferred tax was 1,100. Still, yeah. So it can't be 63. Just check well. Ama hiyo ni ya kitambo, I don't know. Check. So working one, we got 279. 279, 260. 260. Then cost of sales, also working one, 155 for 30. So how much is the gross profit? Gross profit. Part 23. 800. You go to other income. Also working one. Other income working one is 1500. Where? Usually confused. 830. Yes, other kuna 6 hours. Then distribution. Distribution working one. 22,300. Admin working one. 40,790. Finance costs 14,10. PBT, profit before tax. Unipatie hiyo figure. Give me that figure for profit before tax. PBT comes to 68, 30. Income tax working one. Kila kitu hapa ni working one. You will move them from that table. So income tax 25,600. So PAT, profit after tax 35 to 30. Other comprehensive income. Other comprehensive income. Revaluation. There was revaluation gain of how much? 300. So total comprehensive income. Total comprehensive income. How much? 40 by 30. We are done with P and L. Sasa hii umefuata vizuri. This one. I want us to go to the statement of financial position. But before you go to the balance sheet, there is something you need to know about balance sheets. Items of PPE, land, buildings, furniture, whatever, these of it, ufai kuzipeleka. Are you aware of that from the notes? You are also aware. Land, buildings, equipment, machinery, you compress them, then you call them one name. What? PPE, property, plant, and what? Equipment. So you go somewhere, do a working, then you bring them. So let's do that working. Call it working 2. So call it working 2. Working 2. PPE. So you do property, plant, and equipment. What did I apologize? Kuna watu wamekuwa wakitafuta kwa simu, wengine wako hapa. Hata mimi nimeshikana, hata sina actually I haven't taken lunch. To be very honest, I was in class at exactly 6, actually not 6, 5:57. Nilikuwa section 6 alibona. Yes, na sijapumzika. So hata siku natupatani, but I will call people at night. Kwa nini wewe ulikuwa unazipigia? So kama sijachukua simu, especially Saturdays zako zikwangi mzuri. Vipi mtu asikashi shule? So pipi unajua ni mimi nafunza account peke yake. Unajua CPA ni accounting. Unajua hata commerce inafanywa kwa aje? Commerce is the trade and aid to trade. Unakumbuka hiyo kitu? Trade and aid to trade. Aid to trade ni zile zinasukuma trade isonge mbele, sio? Sasa unajua hiyo unit zingine wanasukuma tu. Unajua CPA ni accounting, sasa hii ni accounting. Sasa watu wa ICT na company law so wanasukumanga tu accounting isonge mbele. Sasa lazima tuweke extra hard. Otherwise, imagine hata upite akishaza umepita ICT, umepita sijui audit, sijui company law na umeanguka my facts. Wewe si accountant, wewe ni mtu tu a student. So ni ukuwe serious, ni ukuwe accountant lazima kwanza upite FR. Then unaleta aid to trade. Usikia? Very nice. Kama mnafikiria ile ndio mnasomanga, mnaenda nayo kotini. Usiende hiyo barai. So the ones which were revalued, you take the revalued amount. Once an asset has been revalued, the revalued amount takes over. Land was revalued to how much? 18 something. 18,500. 18,500. Buildings. $34, yes. Building was revalued to 34. Then using in building as you revalued, you go for the net book value. The ones which were not revalued, you go for the net book value. So for plant and equipment, then we find a value. You could get 33 what? But we can still do it. What was the book value for plant and equipment? We did it when I was looking for, I don't know what I was looking for, party. P&E. What was the cost? 55 minus accumulated depreciation 12,800. And this year you charge how much? Check your allocation schedule for P&E. 11,000. So subtract. Sijui unasema. Ulitoa wapi? Nimeanza kitu mahali. Huo wa evaluation ya organic. Hata hii sister yake tumefanya. E, F and F. Baroja tufanye tu hapa. F and F, what was the cost? 35. Accumulated 96. Na pale huko kwa allocation 63.50. So difference 1950. Well, 19
050.
So, can you add for me everything?
050. Just 0 there.
1950.
1905.
There.
Ah.
What? 19050. So can you add everything for PPE?
102.
102.
750.
So, there you go.
Yeah.
Sasa unajua ubaya wa uzuri hii mnamaliza mkienda mbele. Sisi tena next semester tunarudi kwa hizo vitu. Hata unajua answer. Na watu wanajikopaka kutafuta hiyo answer. Unaweza pea mtu slack. Hii inakuwa kole.
Let's go to the statement of financial position. Right there, millennium. As that.
Who keeps calling me when it's not? So I'm very embarrassed. No? Yeah. Can you report for me?
So shillings are in thousands.
Baru nenda mpaka 8. So this yeah. So that is what but then you got me here and morning. But the load is 6:15. That was at 5. But the load video.
Non-current assets. Non-current assets, PPE. Ushakolect sasa na ile ingine. Sawa, tutalisha. Sasa enda ukaka. Sawa. So PP working 2, the one umepata part so you giving me answers. So this is 102, 750. Then check trial balance. Trial balance kuna Kuna nini? Investment at fair value. Sisi kama mnaiona. Investment at fair, hapo chini ya furniture. There is investment at fair value. How much? 34,500. That is also an current asset. Can you add the two? 137? 137 to 50. Current assets. Current assets. So current assets, we have inventory. We have inventory. Inventory, ile closing ilikuwa na tulia 15,970. Please check. There's somewhere we need when we were working cost of sales. Then receivables. Look for receivables. Receivables is 35,950. Then chini ya receivables. For cost of sales, tukifanya cost of sales sahihi. Tukifanya allocation. Yada ndio niambia 16 minus 30. Then we have bank. Umeona? Tukifanya cost of sales. Bank, it is appearing on the credit side, so that is an overdraft. Nothing. Can you add this total? Total assets. Uh-huh.
189.
189.
170.
170. Na wale watu wako na makucha refu wakati siku ya mtihani. Sio ndio mtu anashika kabisa hivi. Sasa hii ndio kushika kama pana. Haya. Equity and liabilities. Equity and liabilities. Ordinary share capital. The first item up there. Ordinary share capital. How much? 40. Give us here. 40. Then redeemable inakuwa na current liability. Hao watu watakuja pesa yao very soon. Haiwekwa kama capital kwa chana naye. Debentures ama revaluation. Revaluation, how much is appearing in the trial balance? Check the revaluation in the trial balance. 1, 2, 3, 4. 4 from top. 34. This year revaluation was how much? Was it 53? Yes. For this year, check other comprehensive. Other comprehensive, we got a revaluation of 53. So add this plus this. 87. Then retained earnings. So retained earnings, apart from the issue. Retained earnings, how much are you seeing in the trial balance? 14,100 plus. Let's wait for each other there. Here, the profit for the year, this one. Don't pick revaluation, pick this one. The PAT. So PAT is 35 to 30 minus. Not the last note, check the last additional information. The last additional information. What did they say? Directors propose to pay a final dividend of how much? 10. Hata kama wajalipa unatoa. That's how accounting is done. So toa kwa retained earnings. 10% times share capital ni 40. Yes, 40. Then so 10% of this, then check trial balance. Trial balance, are you seeing interim dividends? Interim dividends paid during the year. Your preference, your number, like to go ordinary. Ordinary interim, they paid how much? 2,000. So adjust. So this was the retained earnings at the beginning. This is what we got in P&L. These are the proposed dividends. This is what they paid interim. So adjust all that. Copy? 40? Very good. Check the last item in the trial balance. Last item in the trial balance, you are seeing? Share what? Share premium. Share premium, 7,000. Which are? Up to where we are comfortable, you can get something. Unaonaje hiyo compare na group accounts? Partnership ni gani? Haya, umepata ngapi? 99. 0.30. Non-current liabilities. Non-current liabilities, 8% redeemable preference. And so the only liability. How much? 12. 6% debentures. 6% debentures. Gapi? Deferred tax. Deferred tax is a long-term liability. When you are deferred tax, check for me deferred tax carried down. Kuna ile deferred tax account tulichora. Hebu check the carried down value. in the T account, there is that T account for deferred tax. So they have 163 or 53? 63. So Abigail, this is the one you are talking about. 63. Current, not to change camera. Current liabilities. Current liabilities. So current liabilities as usual, payables. Payables is how much? 17,770. Uko chini. Then current tax. Current tax is always a liability. It was in note number 6. 24. Then, you know, they proposed dividends. When you propose, have you paid? No, you have intention to pay. So proposed dividends, we took 10% of 40. 10% of 40 is how much? 4,000. Very good. Then, what does it equal? Bank overdraft, the negative bank balance. So bank or D, the bank balance was that side. 10,740. Then, unaona your dividends, your preference. Preference dividends, can you check preference dividends in the allocation? Pale kwa schedule. Niangalie ilikuwa ngapi. Then we check in tariff they paid how much. Okay. In the allocation was 960. So 9 tariff. So accrued preference deal, it was 960, but in tariff they only paid how much? So for 8 years not been paid. Check for me the venture. Ile muli calculate uko 9 months. The venture, what did you get? There's something you calculated, I don't know what, 9 months. Yes, you got how much? 450. And can you check here how much the venture interest can they say they pay? The venture interest in the trial balance, how much? 300. Those people have not paid 150. Accrued debenture interest. It is 450 minus what? 300. Giving us how much? 150. Kuna customer alilipa pesa in advance. Ile deposit. Customer alilipa pesa in deposit, hiyo si pesa yake. Kama unafunga duka. Customer deposit is a liability. Customer deposit. It was for the 200. About the equity and balance. Add total equity and liabilities. This is what. Naita. Sarap yun
Uliandaa agriculture na hizo zingine. Iko hizo ndo zingine. Uko na So write these assignments. Do for me these two questions. December 2021, question 1. This is pilot paper. Then December 2021, question 4. December there were two sittings. There was the pilot and the read sitting. Yeah? So those are the questions which we shall do in our next class. So make sure you first of all do this one, then you attempt. Then you come here. Can we end the class at that stage? Thank you.